Good day, everyone! You're tuned in to House Lux Estate, your reliable source for all things finance and estate planning. We're all about empowering you with the knowledge you need to make informed decisions about your financial future. Today, we have a captivating topic lined up for you. We are going to talk about a psychological phenomenon that subtly influences our financial decisions, often without us even realizing it. Yes, we're talking about anchoring bias. Have you ever wondered how your first impressions, initial experiences, or the first piece of information you receive might affect your financial planning? That's where anchoring bias comes into play. It's a fascinating concept that can greatly impact your financial decisions and ultimately your financial success. So buckle up and get ready for an enlightening journey into the world of finance and psychology. Today, we'll delve into the fascinating world of financial planning and how anchoring bias can impact it. First off, let's demystify what anchoring bias is. Anchoring bias is a cognitive bias that occurs when we rely too heavily on an initial piece of information, or anchor, to make subsequent judgments. This anchor can be a piece of data, a figure, or a perception that we latch onto, often subconsciously, and it then skews our decision-making process. For instance, imagine you're buying a house. The initial price you see, which is the list price, becomes your anchor. You may negotiate, but in the end, you're likely to pay an amount closer to that initial price. This happens because that first figure you saw has anchored your perception of what the house is worth. Now, let's talk about how anchoring bias works. Our brains are wired to seek patterns and make connections. This is an efficient way for us to process a vast amount of information. However, when we anchor to a particular piece of information, it can skew our perception and lead us to make inaccurate judgments. In the realm of financial planning, anchoring bias can have significant implications. For example, if an investor anchors to a particular stock price, they may miss out on selling at a profit because they're waiting for the price to return to their anchored value. Similarly, they may hold on to a losing investment for longer than is wise, hoping the price will bounce back to the anchored price. Why does this matter? Well, anchoring bias can lead us to make decisions that are not in our best financial interest. It can cause us to overestimate the value of an investment, underestimate the potential for loss, or make faulty predictions about future performance. Understanding anchoring bias is an important step in becoming a better, more informed investor or financial planner. By being aware of this bias, we can work to mitigate its influence on our decisions, helping us to make more rational and sound financial choices. So, anchoring bias can greatly influence our decision-making process, especially in financial planning. Now that we understand what anchoring bias is, let's see how it affects financial planning. Anchoring bias, as we've learned, is a cognitive bias where we depend too heavily on an initial piece of information, known as the anchor, to make subsequent judgments. Now imagine applying this bias to the world of financial planning. It's like trying to sail a ship with an anchor that's stuck. It can seriously slow down or even derail our financial journey. Let's dive into some real-life examples. Consider the case of a young professional who has just started her first job. She's earning a decent salary and decides to start saving for retirement. She's heard from her parents that a good amount to save is 10% of her income. This becomes her anchor. But is it really the best decision for her? Maybe not. Depending on her financial goals, living expenses, and other factors, she might need to save more or less. But because she's anchored to that 10%, she might fail to make the optimal decision. Or consider a seasoned investor who bought a stock at $50 a share. Even if the market value of the stock drops to $30, he holds on, anchored to the initial purchase price. His decision to sell or hold the stock should ideally be based on the stock's future prospects, but the anchoring bias could lead him to make less rational decisions. Ever noticed how we tend to stick to our old habits, even when they're not serving us well? That's anchoring bias at work too. We're so anchored to our past financial behaviors that we resist change even when it's clearly for the better. We might be overpaying for services, holding on to bad investments, or failing to take advantage of new financial opportunities, all because we're anchored to our past decisions. Anchoring bias can also affect how we perceive value. Let's say you see a shirt in a store originally priced at $100, but now it's on sale for $50. You might think it's a great deal and decide to buy it. But is it really worth $50? Or are you just anchored to the initial price? As these examples illustrate, anchoring bias can have a profound impact on our financial decisions. It can lead us to save too little or too much, hold on to bad investments, resist beneficial changes, and overpay for goods and services. It's a sneaky bias, often operating below our conscious awareness, but its effects can be significant. So what can we do about it? Well, the first step is awareness. By understanding how anchoring bias works and being mindful of it, we can start to make more rational financial decisions. As we can see, anchoring bias can potentially lead us to make less optimal financial decisions. But fear not, in our next segment, we'll discuss some strategies to overcome anchoring bias in financial planning. Stay tuned. You might be wondering, how can we overcome this bias in our financial planning? Well, let's dive right into the heart of this matter. Overcoming anchoring bias in financial planning is an achievable goal. It may not be easy, but with some practical strategies and a heightened sense of awareness, it's definitely possible. First off, we need to be aware. Awareness is the first step to change. It's important to recognize that our brains naturally lean towards the first piece of information we receive, the anchor. This is not necessarily a bad thing, but it can interfere with our financial decision-making process. So when you're planning your finances, take a moment to question yourself. Am I basing my decisions on the first piece of information I received? If the answer is yes, then you've just identified an anchoring bias. The next step is to challenge this bias. Challenging could mean seeking out diverse opinions or exploring other data points. For instance, if you're planning to invest in a property and the first price you hear is $200,000, don't just stop there. Explore the market, seek out comparative prices, and analyze the data. Then it's time to implement a system of checks and balances. This could be a trusted advisor, a financial planner, or even a software tool. These resources can help provide an objective analysis, free from any potential anchoring bias. They can offer a different perspective and help you make more informed financial decisions. Remember to also practice patience. Financial planning is not a sprint, it's a marathon. It takes time to gather all the necessary information, to process it, and to make sound decisions. Rushing into decisions can often lead to anchoring bias. So, take your time, be thorough, and avoid making snap decisions. Another strategy is to create a decision-making framework. This framework should include a series of questions or steps that force you to consider various factors before making a decision. For example, you might ask yourself, have I considered all the relevant data? Have I sought out alternative viewpoints? Am I rushing this decision? This framework can serve as a safeguard against anchoring bias. Lastly, never underestimate the power of education. Keep learning about financial planning and behavioral finance. The more you understand about these concepts, the better equipped you'll be to identify and overcome biases. In conclusion, overcoming anchoring bias in financial planning is about awareness, challenging the status quo, implementing checks and balances, practicing patience, having a decision-making framework, and continuous learning. Each of these elements plays a crucial role in mitigating the effects of anchoring bias. By being aware of and actively managing anchoring bias, we can make better financial decisions. So let's commit to overcoming anchoring bias and making smarter, more informed financial choices. Let's quickly recap what we've learned today. Anchoring bias is a cognitive shortcut that influences our decision-making process, especially in financial planning. It's that tendency to rely too heavily on the first piece of information we encounter, the anchor, when making decisions. In the realm of financial planning, this can lead to suboptimal investment choices and skewed perceptions of market value. But remember, awareness is the first step towards overcoming this bias. By acknowledging its existence, questioning our initial assumptions, seeking diverse perspectives, and utilizing objective data, we can navigate around this mental pitfall. In essence, understanding and overcoming anchoring bias can significantly improve our financial decisions, leading to a more secure and prosperous future. Remember, your financial future is in your hands. Stay informed, stay savvy, and don't forget to subscribe to House Lux Estate for more financial insights. Until next time.